Welcome into my Vanguard portfolio update now for November. One of the last ones before we close out 2023, and I can't believe we're already saying that now. We'll jump into my portfolio in just a second where we look at everything inside my ISA and my self-invested personal pension. But as we always do, let's have a quick look at how the markets have been doing over in the US, around the world, and here in the UK as well. So starting with the good old favourite, the S&P 500. As I film this video, we are just finishing off an 8-day winning streak before it all came crashing down yesterday. As you can see on screen now, performance-wise, the S&P 500 sat at 4,400 points. Now, what's interesting though this month, it's been quite volatile really. As you can see, this dip here, it actually went down quite a lot, almost 6%, but then bumped back up all the way using this nice winning streak, which unfortunately came to a big crash and burn. Now, the financial media are reporting saying Jerome Powell caused this because he mentioned that interest rates may have to be pushed higher. So lots of people get very nervous apparently and start selling off all of their stocks and they just run away apparently. Just stepping away from stocks for a second, the 10-year Treasury has been coming down just a little bit. Now, as many will know, or maybe some of you won't know, kind of bonds and stocks are always kind of in this battle really for investors' money. When yields are high and the prices are low of bonds, you're looking at that thinking, I can get a guaranteed return on my money of 4.5%, 5%. When you're looking at stock market thinking, well, yeah, I could get the long-term average of 9%. But if I look at what's happened over the past year or so, people get very nervous and they kind of stick to that bond market. Now, what's happening with bonds at the moment is we did get on the 10-year yield from the US government approaching that 5% mark. And now we're kind of back in that 4.5% range. Now, the bond market, I think, can get really complicated because the bond market kind of determines the price at what the government can borrow new money at. And the US government especially needs to borrow a huge amount of money just to get by. And the more and more money they borrow just really does not help with inflation and kind of weakens US dollar. I mean, every single central bank faces this, but it's a really interesting balance between the bond market and what governments need to spend. And it's also an interesting one as well for investors. So I do see in the comment section often a lot of the time saying, you know what, in the short term with interest rates the way they are, especially here in the UK as well, because our interest rates are sat at 5.25%, I can get this if I stick my money in an ISA, for example, for 1 or 2 years versus the stock market, as most people have been quietly rightly pointing out. Over the past year or so, depending on when you've bought, you may see yourself at pretty much level or pretty much nothing. So therefore, buying a bond or some kind of short-term ISA, for example, which ultimately will be invested in bonds, being able to get that return seems quite nice. It's always been a balance. Whereas in 2022 and beyond, we had many years and years of very low interest rates. Lots of people thought, well, the stock market was the only game in town. Therefore, everyone put their money in the stock market because who would want to put their money in these really long-term bonds getting like 1%? But even saying that, plenty of people did, which is wild to me. And it's funny, I can't remember which country. Was it a European country or a US country? Whoever's offering like 50-year bonds. I mean, some people were buying 50-year bonds with like a return of 1% a year, which just blows my mind personally. But anyway, now over the last month, we did go through lots of different earnings. I did kind of cover some of those in my InvestEngine portfolio update. I don't want to go in too much depth, but overall, I would say the consensus was that earnings were pretty good overall, especially from big tech. You had huge, amazing numbers from the likes of Microsoft, who just continued to beat expectations, which just blows my mind constantly. Amazon had good earnings. Google had fairly good earnings. Tesla, unfortunately, didn't have some of the best ones. They've kind of seen a bit of a sell-off. They did also have a rebound, and then it's in another sell-off again, as I'll just put up on screen now. You had HSBC calling it a very expensive auto company, which just caused another sell-off apparently, although it was a red day in the market. So with some of these news stories, I always kind of take them with a pinch of salt. Remember, the news media likes to look for a reason why the stock market did something, when the only reason it did something is because more people are selling than trying to buy. And it's really the market decides at the end of the day. Now, just before we head over to close to home here in the UK, remember last month I talked about oil prices and we were talking about potential fears of going to $100 a barrel, which is never good for the global economy, as this tends to feed into all of the things we like to buy and all of the things we need to move around the world, etc. Actually, funny enough, oil prices have now been on a decline since that last video, so I'll put that up on screen now. You're seeing now that under $80 a barrel, at least time I'm filming the video, and that's from fears of demand slowdown across China and the US and all other places around the world. It's amazing how quickly sentiment and things can change. And it's quite funny, I think, when we look at investor psychology, You know, when we see a chart going up, we assume it can only go up, and we see a chart going all the way down, we just assume it's going to continue down. It's interesting, fascinating how quickly things can change. But anyway, that's where we are now. Now, from a UK perspective, let's have a quick look. Our two major indexes here. The FTSE 100 is down 3.5%, at least at the time of filming, as per usual. By the time I put this video up, maybe in a week's time, actually, things are going to change dramatically. The FTSE 250, let me just bring this up now. I should probably do this more often because this kind of gives us a bit more flavour of the actual UK market and the more of a more of those domestic companies. The FTSE 250 is down just 1%, so that's quite an interesting one there. Kind of shows, I guess, where the demand is going from those global companies, which mainly serviced are in the FTSE 100. Notable news I did mention earlier, interest rates, at least the last decision for the UK perspective, have been held at 5.25%. The general consensus there is they're going to be staying there for a while until inflation gets kept under control. We'll keep an eye on those figures as they come out next month. It'll be very interesting to see where they go. I guess many people, though, are still feeling the pinch of that when it comes to filling the car up, and especially at the supermarket, where personal rates of inflation that people actually see are definitely way above that average, which was last reported by the ONS. Without diving into any crazy detail, I did just see as I was filming this video that Diageo, the big drinks and spirits producer, is down 15% today, at least as I filmed this video. It's quite interesting. They say that whiskey sales have been falling in the Caribbean and Latin America, and they noted that people are trading down, so presumably just picking any old brand to get themselves drunk rather than going for those premium brands, which is quite interesting. I think we're seeing this all around the world, aren't we? I think from a UK perspective, you think lots of people who might traditionally go and shop at the Tesco's and the Sainsbury's and Morrison's, for example, going down to Aldi and Lidl, because really, they offer great value, to be honest. And I do exactly the same myself, always kind of flicking between different supermarkets who can get the best deals. Prices have risen substantially, but it is interesting when people are comparing those same sort of things that really, it doesn't matter if they cost a bit more money. It's the same stuff inside. And while I was looking at the headline, I wanted to look at the long-term performance of Diageo, because actually it does get up brought quite a lot, because it's quite a nice dividend growth stock. At least that's how it would be traditionally classified. The 5-year total return is just 24% if you include reinvesting all of those dividends. And if you compare that to the S&P 500, the S&P 500 has delivered 68% in exactly the same time period, again, reinvesting all of those dividends. Just another reminder, and lots of videos I make about this topic, that it's extremely difficult to try and pick those winners over the long term. And no matter how many times I have to tell people, but dividends are not free money and they are not a hedge against inflation. But hey. And finally, before we move into the portfolio itself, I did want to actually pick out, I don't really talk about this much, but the crypto market is making some interesting moves. Both Bitcoin and Ethereum has had a pretty good month, actually. They're probably one of the top performing asset classes as we move into the closing stages of this year. Two big pieces of news are kind of getting people into a bit of a fever pitch, maybe for a second bull run in the crypto market. And that is really people are trying to await these crypto ETFs. So there are a couple of proposals out there right now for a Bitcoin ETF, also for an Ethereum one. So I've just seen that news breaking over the past day or so. Now, if they do get approved, and I think many people are rightfully thinking that they probably will at some point, I can absolutely see the price of these assets going up in value. However, just a warning to everyone, although personally I do actually hold some Bitcoin and Ethereum, just as a very small part of my portfolio, do remember at the moment, it's still very much unregulated, anything can happen, and if you've been keeping a close eye on the news recently, you would have seen just how bad Sam Bankman-Fried got off with FTX, and lots of people lost all of their crypto and all of their assets in that one. And although he is facing decades in prison, at the end of the day, you're not going to be getting your money back. So just be very, very careful there. But I do think there's a bright future, especially for the likes of Bitcoin. Ethereum, I think as well. Lots of other ones, though, extremely risky. I don't know why people bother, to be honest, but there's plenty of grifters here who will take your money. So just be careful. Okay, time to jump into the portfolio now. Let's have a look on screen now. We're at 55,733. That's the combined value for both the SIP and the ISA. As usual for international viewers, I probably have a few of them. I will put up the dollar figure now for you. Now remember, as I just said, this is the combined value of both my pension, which is my self-invested personal pension, and my ISA. My pension is where I combined all of my old workplace pensions, put them into one place. Remember, I can't touch that until I am 58. Well, that date could change. So remember, you can't touch that money. Whereas the ISA is the amount that you can actually touch and you can actually bring it out at any point, and there's no dividends or capital gains to pay on that one. My current ISA, though, is with InvestEngine. So remember, I'm not actually contributing any new money to this one. So really, we're just seeing what's happening to it month by month as we go through. So speaking of that one, let's go onto the investments one and just have a look. Now, I think briefly checking on last month's update, I think we're about the same, maybe £100 less. So really, as we've seen earlier, the market has it went down quite heavily, but actually it just came back up. So just the volatility of the market is quite extraordinary, but really it ended up just flat. Let's have a look at the performance tab here. It's always an interesting one. If you do have a Vanguard account, I do always quite like this one, especially going month by month. I think it's always the interesting one to see what happens with your money. And as this one loads up, I'm sure we're really just going to see that nothing has really happened much this month, as you can see here. So what we're seeing here is really interesting because it makes out like October was a really bad month. And actually, by the time I did my portfolio update, the market hadn't actually dropped yet because October was a terrible month for the stock market. It gave September a really interesting run for its money. And it makes November look like a really good one because November so far has started relatively strong because it's come from such a low base that it's set at the end of October. Now, with these portfolio updates, I always like to try and, share a different kind of tidbit of information or try and go through different points because otherwise you can make them very stale. And one of the things that keeps coming up now and then, actually, it's a really, really great question that I get in the comment section is, for example, why do you prefer to contribute into a pension versus an ISA? Or in my case, why do you kind of prioritize an ISA at the moment rather than putting money into a pension? And it's a really, really good question. And I think it probably warrants its own entire video, actually. So I probably need to do a video explaining a SIP versus an ISA and just generally pensions versus ISAs, what the difference is, and maybe where you as an investor might want to prioritize your money. In fact, I think that's a really, really good video to say from the beginning what I think personally from my perspective is a good priority to put your money. Because I think especially like a workplace pension, which really should be the kind of priority, but after that kind of gets a bit more interesting about where you want to put your money. Now, just a couple of interesting things on self-invested personal pensions. Remember, you actually can invest up to £60,000 per year into your pension. And that includes your workplace pension and any private pension. So that's the total amount you get. And remember, it can't be worth more than 100% of what you get paid. So you can't earn 30k a year and put 60k in. You would have to earn 60k a year to be able to warrant putting another 60k in. Just be aware of that one. You can check the rules. Remember, I'm not a financial advisor, so please do just check on the government website to confirm those rules because they probably will change over the next couple of years. Now, on a positive note, remember that an ISA, for example, although it's completely tax-free in terms of the dividends and capital gains, there's no bonus when you put money in. Whereas on a personal pension, there is a bonus when you put money in. Don't forget, from a workplace side, your employer is putting money in, they're matching you, which is completely free money. You should always take advantage of that. But on a personal pension, you can get a couple of different tax breaks. So first, you'll get topped up from the government by 20%, but then also you can claim additional rate relief if you are one of those higher rate taxpayers. And it is a very, very powerful tool if you are fortunate enough to earn in those higher tax brackets, especially if you're earning quite the big bucks. Pension is a great way to reduce your tax burden and then just squirrel that money away for a later date. The only downside, which I'll probably go on in more detail in a kind of dedicated video, but remember there is a lifetime allowance on a pension, which does kind of sound like a lot of money, and it is a lot of money, over £1 million. But if you are on quite big money for quite a long career and have a good stock market, you can get to that one. And you may have seen that one in the news when the NHS was talking about trying to recruit senior doctors or stop senior doctors, for example, from retiring because there was no incentive to keep working because their pension contributions were just costing themselves a fortune. So it's always a balance there, but I think it does need a dedicated video to talk about it. But don't forget that you can have as many self-invested personal pensions as you like. There is no limit like ISAs. And actually, I will probably create a new one for my own self over on InvestEngine's platform, which I have my current ISA with. Because I work for myself at the moment with this YouTube channel, I really should start to contribute to a pension outside of an ISA, which I'm kind of prioritizing. So maybe I'll try and get that going, £100 or £200 a month if I can into a SIP, because there is that tax relief there. Can't touch it, but it is free money. So I need to kind of work out that myself. But so lots of things to discuss there, lots of things to work out, but it is an interesting one if you are in that fortunate position where you might have additional money or you have money that you can lock away for a very long time. Remember, it's tax on the way out. There is a tax relief of 25% of the cash, so it does get more complicated. Good old investing. It's never super simple. You might want to, this is when you might want to consult, a personal advisor, for example, who's actually properly qualified, especially if you've got mega money. But anyway, that's an interesting one to talk about. And just before we wrap things up, remember for new viewers, I have my portfolio super simple and it really helps me sleep at night. Everything I own in the Vanguard portfolio is in the FTSE Global All Cap Index Fund, the accumulation version, as you can see on screen now. I don't get paid any dividends. Any dividends are automatically reinvested into this fund, and it is a mutual fund, not an ETF, which just means that really you can invest that full amount of money because Vanguard don't offer the ability to have fractional shares. I did share in the last portfolio update that For example, if you were using another platform like Trading 212, who I also use, and InvestEngine, who again, I also use, there is a good fund, VWRP, which is an ETF, which is a global one, which potentially you may want to invest in. That gives you pretty much similar exposure to this one. But for now, pretty happy with this one. Yes, you could definitely get cheaper options. Is Vanguard the best platform? The platform itself probably isn't absolutely the best. It's not the easiest to use. They don't have a fancy app, but really then, stops me logging in every single day and seeing what's going on with the market. This is a pure set and forget portfolio. You let the market take care of itself. Yes, it's a pain sometimes. You can see it going down, but really you just have to get that switch in your brain that says, I don't mind red days. That's just my, time to take advantage of the sale and get those prices better for the long run. So that about wrap things up. I am actually looking forward to, before the end of next year, I have a video plan, what I'm going to do. Now, if you remember, if you are a long-term viewer of the channel, thank you, by the way, because sticking with me for a couple of years is pretty impressive. But remember, I did a prediction video toward the end of last year. So I'm going to react to that one at some point to see my predictions, and also lots of community polls that I asked you guys about what your predictions were for the year ahead, because 2022, as remember, was an awful year. I think lots of people were very pessimistic. Remember, there was a guaranteed recession. Everyone was going into a recession. Everything was going to go down. But I think 2023 so far, touch wood at least, has been quite an interesting one. And I guess not many people would have predicted what actually happened. So I will review on that one as we close out this year, which I can't believe I'm saying. Now, rather than leave you with my portfolio updates and say, just go back and watch these ones, I think this next video is probably one of the most interesting ones I've ever made. Now, this next video goes through my 3-step plan to almost never lose money in the stock market. Again, touch wood, but I do think these 3 key things are extremely important and you might want to check the one out next. Anyway, I'll see you in the next video. Happy investing.